let's talk about accounting for foreign transaction. Okay, let's have an example first. Let's assume, okay, let's assume that you have two entities. Okay, you have the seller, and you have the buyer. Let's assume that the seller, okay, is in the Philippines, so the seller will be using pesos as the reporting currency, and the buyer yung mag-import. So this is the exporter, this one is the importer. Okay, so the buyer is having dollars as the functional or reporting currency. Let's assume, okay, that the seller is going to sell merchandise amounting to 10,000 pesos to the buyer. Take note that this transaction is denominated in terms of pesos. Okay, and since we are here in the Philippines, pesos is our local currency. Okay, so ayan. Now let's assume that this transaction is sold and paid on the same day. On that date, okay, the exchange rate is $1 is to 50 pesos. Okay. So in the books of the buyer, to record this sale as of, let's say, December 1, in the books of the buyer, you are going to receive cash and you're going to credit sales. How much are you going to receive? This will be 10,000 pesos. Sir, why? Because it's denominated in pesos. This one will be 10,000 pesos. Now, in the books of the buyer, as of December 1, this will be recorded as a debit to inventory or purchase. Okay. This will be recorded as a debit to purchase or inventory and a credit to cash. As of this point, okay, because it was bought, and paid on the same day, this one will be recorded at $200. Oops, this one should be dollars. Okay, at $200. Okay, so paano po nangyari ang $200? Okay, this can be computed by multiplying or by dividing pala. Dividing 10,000 pesos by 50 pesos. Okay, which came from this exchange rate. Okay po. So this is just an example. If you notice, there is no gain or loss. Why? Because the date of sale or date of purchase, okay, and the date of payment or collection is the same. Now let's have another example. Okay. What if let's say the transaction or the purchase happened in December 1 and it will be paid on December 30 on the same year. This is now what you call your measurement date, where the gains and losses and the fluctuations in the foreign exchange, quotation will be measured. Okay, let's assume that on December 1, let's say that for every $1, okay, the value is 50 pesos. And for December 30, the spot rate, okay, let's assume that for $1, okay, $1 is to 55 pesos. So what are now the journal entries found in the books of the seller and the buyer? Yan. So as of December 1, in the books of the seller, you are now going to record. Take note that this is the date of sale, but this is the date of payment or collection. So to record the sale, you are going to debit accounts receivable and credit to sales, okay, amounting to yan. So we're going to measure the transaction using this exchange rate. So pero since it's denominated in pesos, we will just record this at 10,000 pesos. Okay po? Yan. Now, in the books, no, in the books of the buyer as of this date, there will be a debit to inventory or purchase and credit to accounts payable amounting to 200. It's $200. Okay, upon payment, the journal entry now, okay, yan, will be debit to cash. Upon collection, you will have a debit to cash and credit to accounts receivable. Amounting to how much? Still 10,000 pesos. As of this point, I want to emphasize, okay, that for the seller who's operating here in the Philippines, so yan, local seller yan, okay, and the reporting currency is peso, and then the transaction is denominated in pesos, okay, this seller is not affected by the fluctuations, in your foreign currency. But what about the buyer? The journal entry now in the books of the buyer will be a debit to accounts payable, which is originally recorded at 200. You will now have a credit to cash. Okay. Since this buyer has to pay 10,000 pesos, you have to measure that, remeasure that, okay, using this exchange rate, okay, which is 1:55. So, what do? Again, you divide 10,000 pesos, 10,000 pesos, divide that by 55. Okay, so, gawin natin yan. Divide this by 55, okay? And the value now is how much? If you have your calculator, you will compute something that's around 181.82. Okay. From 1:50, naging 1:55. So, dollar became stronger against peso. So, tumaas po yung value ng dollars. In this case, this buyer will now pay less than $200. Okay, he will just pay 181.82. And the difference will now be your gain. Or simply your forex gain. Ganun na lang kung gusto niyo mas malinaw. Forex gain amounting to the difference 200 minus 181.82. This one is $18.18. Okay. Take note that there's no gain or loss if your reporting currency, okay, is the same as the currency used in the transaction. Okay? So, ayun lang. If your transaction is denominated, that's the term, denominated by the currency that you are using to report, ayan, or to prepare financial statements, you will recognize, syempre, okay, the translation, not the translation, the fluctuations of your exchange rates if your reporting currency is different from the currency used to measure, or the currency that is used to measure your transaction, yung denominating currency natin. Okay po, let's have another example. Let's assume, let's have the same example na lang. Okay, so you have the seller, the seller is using pesos, okay? So yan yung mag-export. And then you have the buyer, okay, using dollars. So siya ngayon yung mag-i-import, okay? And then let's assume, no, as of December, as of December 1, the seller is going to sell inventories amounting to $200. Okay. Take note, earlier, okay, the transaction is denominated in pesos. This time, the transaction is, no, dollars. Ulitin natin. The transaction is denominated in dollars. Let's change that. Let's change that into dollars. When the exchange rate is $1 is to 50 pesos. Meron din ba kanina? $1 is to 50 pesos. Now, let's assume that this one will be paid on the same day. Okay, so what will now be the journal entry in the books of the seller? Okay, as of December 1, there will be a debit to cash and a credit to sales. Okay, how much will be the cash? You have to convert that, no? So you have $200, which will be paid, okay, at 50 pesos per dollar. So you will now have 10,000 pesos. And then your sales will still be 10,000 pesos. In the books of the buyer, you will now have a debit to inventory, okay, inventory and credit cash, which is amounting to $200. Ayan, $200. So these are now your journal entries. Ayan. But what if, no? What if the transaction will happen on December 1, but it will be paid on December 31. Okay, let's assume that the exchange rate as of December 1 is still yan, $1 is to 50. But then as of December 31, ano na ba yung ginamit natin kanina? Earlier we used 1 is to 55. So let's just use this. 1 is to 55 pesos. Okay, so what are now the necessary journal entries in the books of the seller? Okay, so as of December 1, so we have to convert that, right? You will now have a debit to accounts receivable amounting to 10,000 pesos and a credit to sales, which is also 10,000 pesos. In the books of the buyer, you will have a debit to purchases or debit to inventories and merchandise inventories and credit to accounts payable amounting to $200. Now, as of December 30, at the date of collection in the books of the seller, there will be a debit to cash. Okay, how much are they going to receive? As of December 30, $1 is equal to 55. So, bumaba yung value ng pesos, tumaas yung value ng dollars. So, this $200 will now be measured using 55, yan, 55 pesos. So, you multiply 200 times 55, this one will be 11,000. Okay po? And then you're going to credit accounts receivable, which is previously recorded at 10,000. So, in this case, you now have a gain, okay? You have a gain amounting to 1,000 pesos. Diba? It's denominated in dollars. So initially, okay, the value is 1 is to 50. So this $200 has a value of 10,000 pesos. But then, after 30 days, okay, $1 became 55 pesos. So, instead of receiving 10,000, you will be receiving 11,000. Okay po? So, that is now considered as your forex gain. Okay. Ayan. Kung may naririnig kayong bata, anak ko yun, yung tumatawa. Anyway, let's continue. In the books naman, no? In the books of the buyer, you will have a debit to accounts payable. Okay? Because it will be paid. Accounts payable amounting to 200 and credit to cash amounting to 200. This time, the buyer is not affected by the changes, no, or by the fluctuation in our exchange rates within this measurement date. This is what you call your measurement date. The measurement date is actually from the date, no, of the purchase up to the date of payment. That's your measurement date. Okay, any changes that will happen between the date of transaction and the date of payment will be recognized as a gain or loss. But if the transaction, okay, is denominated by the reporting currency, that's your reporting currency, this is the transaction denominated by the reporting currency, there will be no gain or loss. This is contrary to some discussions, no, which is found in some books, that if the seller will recognize a gain, then the buyer is going to recognize a loss. Okay, it doesn't follow. Okay, it doesn't follow. Ayan. Now let's look at the first example. Ayan. You notice, no? We only changed, okay, the transaction currency. Okay, it's the same values, same exchange rates. Okay, but when we used, no, the reporting currency of the seller, there is no gain or loss in the books of the seller. Okay, but there's a gain reported in the books of the buyer. When we use the reporting currency of the buyer, okay, to measure our transaction, there is no gain or loss in the books of the buyer. Instead, okay, the adjustment or the difference is found in the books of the seller. Okay, let's have another example. Now, take note that in this example, okay, transactions or the journal entries for these transactions are compared when, number one, okay, the date of transaction and date of settlement is the same day, or the date of transaction and the settlement date, okay, are different dates, but they still belong dapat to 30 pala. I'm so sorry. This one is 30, this one should also be 30. Ayan. Okay, but they still belong to the same calendar year. Okay. Now, what if, okay, what if your transaction date and your settlement date, okay, belongs to different calendar or accounting years? This means that between the transaction date and the settlement date, you have your balance sheet date. Okay, so this is now our measurement date, from the date of transaction up to the date of settlement. Yan. Let's have an example. Let's use the same example. What if you have here the seller, okay, whose reporting currency is pesos, and you have here the buyer whose reporting currency, okay, is in dollars. And let's say that the seller is going to sell, okay, merchandise amounting to 10,000 pesos. Okay, let's say that, or let's assume that the transaction date, okay, has an exchange rate of, let's say, $1 is to $1 is to 50 pesos. And then at the balance sheet date, okay, at balance sheet date, instead of transaction date, let's just use December 1. And then on December 31, which is the balance sheet date, okay, you have, ano kayo maganda? For every $1, you will have 58. Oh, yan. You have 58 pesos. And then let's assume that this transaction will be paid, okay, or collected on, ganyan na lang, January, let's say January 31, where the exchange rate is $1 is to 55, 55 pesos. So what are our journal entries? Let's start with December 1. In the books of the seller, of course, there will be a debit to accounts receivable amounting to 10,000 pesos and a credit to sales amounting to 10,000 pesos. Now, in the books of the buyer, you will have a debit to purchases or inventories. Siyempre, historical cost, di ba? Hindi ko malam i-spell ng tama ito. Okay, you will now have inventories and credit to accounts payable amounting to $200. Okay. How did we arrive at $200? That is computed by dividing 10,000 by 50 pesos per dollar. So these are the transactions as of December 1. Okay. Now at balance sheet date, we have to make some adjustments. Okay. So as of December 31, okay, since this one, the transaction is denominated by the reporting currency of the seller is not going to record any adjustment. Meaning, he's not affected or they are not affected by the fluctuations from December 1 to December 31. Kasi pesos na yan eh. Okay, so there will be no entry for this year, okay, or for the books of in the books of the seller, but in the books of the buyer, nako, we need to make certain adjustments. Okay, there will be, let's see if this $200, yan, or if this 10,000 pesos, which is initially valued at $200, if this 10,000 pesos will be paid now at the end of the year at 1 is to 58, how much are they going to pay? You have to compute that. Okay, so magko-compute tayo. You have 10,000, divide this by 58. Okay, so where is my calculator? 10,000 divide this by, oops, hindi gumana yung calculator ko. 10,000 divide that by 58 equals bakit siya umatras? Ayun, divided by 58, it's 172,413. $172 and let's say 42 naman. Okay, 42 centavos. Meaning, magkakaroon sila ng, is this gain or loss? If they're going to pay this 10,000 now at the end of the year, how much are they going to pay? They are going to pay $172.42. So this one is considered as a gain. Okay. And we have to make certain adjustments on our liability. Kaya magde-debit tayo ngayon dito. Debit to accounts payable and credit to gain. Okay? Gain on foreign exchange transaction. Okay? So this 200 should be stated at 172. So you have to compare now 172.42 versus 200. Okay. What will you get? We will get 27.59. So that is now our adjustment. 27.59 ba? 58. Okay. Kung 42 yun, para sigurado. 58 na lang. 27.58. Oops, I'm so sorry. Dapat yata ito yung 41 para ito yung 59. Okay po? So after this journal entry, the value of your accounts payable is now 172.42. Now, let's continue. What if this is paid or collected na in the books of the seller? No, this will be collected on January 31. What is now our journal entry? This will be a debit to cash and credit to accounts receivable amounting to 10,000 pesos. Yan. Now, in the books of the buyer, there will be a debit to accounts payable. How much? Okay, at its new value, diba? Which is 172.41 dapat to. Ayusin na nga natin para hindi nakakahiya. Ayan, this should be, and this one should be 9.59. So the value is 172.41. Okay. Oh, what else? We are going to pay cash. How much are you going to pay? Okay. If this one will be paid on January 31, the exchange rate is $1 is to 55. So to compute that, okay, how much are you going to pay in terms of dollars? That will be 10,000. 10,000 divided by 55. So let's compute. What is 10,000 divided by 55? And the value will be 181.82. Okay, so this is now the value of your cash. 181.82. This means that there will be, is this a gain or loss? There will be a loss. We have a loss of the difference, no? The difference of the two, which is 9.41. There you go. You have 9.41. So initially, you recorded a gain of 27.59. This will be for year 1, no? For year 1. And on the second year, you're going to record a loss amounting to 9.41. If you combine the two, 27.59 versus 9.41, you will now have a net. You will have a net gain amounting to 27.59 minus 9.41. You will now have a net gain of 18. There you go, 18.18. This is your total gain, total gain from the forex transaction. It's just that in year 1, you are going to record a gain of 27.59, and in year 2, you are going to record a loss of 9.41. Okay? So another way to compute that is you get the difference. Dito po nanggaling yung gain natin. Okay? And for year 2, dito po nanggaling yung loss natin. Okay. So, I guess that's it. Let's have another example. Oh, wait lang. Baka pala merong magtanong ng shortcut. Okay? Shortcut for the gain or loss. Okay? Since we are going to pay 200, so 200 divided by, ay wait lang, nasa na yung aking trusted na calculator. Ayun, nahanap ko na yung calculator. Anyway, let's continue. Okay. In some books, they are going to show you a shortcut. Sabi, the difference, this one is dangerous. You have to be cautious. There's a formula given. The difference, sabi niya, the difference of your exchange rates, okay, times the foreign currency. So, in this case, ayan, let's get a color. Dito tayo. In this case, it's 200 times 3. You will notice that, aba, this one is 600. Okay, so it doesn't follow, no? It doesn't follow. Or if you divide 200 by 3, you will still get a different amount, no? It's not 27.51. Take note that that formula is only applicable if what is given is how many dollars per local currency. Okay, so 50 minus 58 is not applicable, no? You have to get the reciprocal of that. It's 1 over 50, 1 over 50, which is 0.2, minus 1 over 58, which is point something. Get the difference, and you multiply that by 200. Diba? So, this approach is not correct. Ayan. Okay? If you want to use that approach, it should be stated on using the indirect quotation. So that will be 1 over 50 minus 1 over 58 times 200. And you should get something that's around 27.59. And then here, you will get 1 over 58 minus 1 over 55, and you multiply that by 200, and you should get something around 9.41. Okay, so ganun po yung explanation ng shortcut na yun. Kasi may nagtanong, sir, how come this formula is not applicable? Okay, the answer is not found in the choices. Because that formula, okay, this minus this times your foreign currency is only applicable if, okay, the ratio is the opposite, indirect ratio. You have how many dollars are there for every 1 peso. Direct ba or indirect? Napagbaliktad ko na. Anyway, that will be discussed in another video. Okay po? Okay, now, let's continue. What if, ganito kasi kanina eh, ayan. This one is denominated by the reporting currency of the seller. What if this one is denominated by the reporting currency of the buyer? Okay, so, sige, let's do that. You have the seller using pesos. You have the buyer in dollars, okay? The seller sells inventory at $200. Okay. And then, let's assume that as of December 1, the transaction date, let's just use the same for, same example, okay? You have $1 is to 50 pesos. And then on December 31, the balance sheet date, okay, you will have $1 is to 58. And then for January 31, you have $1. Tama ba? Is to, what's our rate earlier? It's 55. Ini-invento ko lang kasi to as we go along. Yeah. So what our journal entries as of December 1 in the books of the seller, you will have a debit to accounts receivable and credit sales. Okay, how much will be your accounts receivable? That will be $200 times 50. Okay, sulat natin dito. $200 times 50, you will now have 10,000. And this one will be 10,000. In the books of the buyer, you will have a debit to inventories. Okay, and credit to accounts payable amounting to 200. Okay, amounting to 200. There you go. For the balance sheet date, okay, mag-a-adjust po si seller. Why? Because the transaction is not denominated by the reporting currency. Okay, so we are now going to adjust the value of our accounts receivable. But the question is, by how much? So let's try to analyze. If we are going to receive this dollar, okay, if we are going to receive this dollar as of December 31, $200, no? For December 31, when the value of $1 is 258, we will be receiving, magkano po yun? That will be 200 times 58. Where is my calculator? That will now be 11,600. Okay, 11,600. Okay, so this means the value of accounts receivable increased from 10,000, okay, to 11,600. So if you're going to receive that, the value of your AR now should be 11,600. Paulit-ulit lang ako, di ba? But you're not going to debit 11,600. Instead, you will just add 1,600. Okay, so that will now be 10,000, okay, versus 11,600. Okay, and credit sales, hindi. This will now be your gain or your forex gain. Amounting to 1,600. In the books of the seller, there is no need to adjust because the transaction is denominated by the reporting currency. So no entry. Now, as of January 31, you will now have a debit to cash. How much are you going to receive? You are going to receive $200 times 55. Okay. So this one will be 11,000. Yan, 11,000. You will credit accounts receivable, which is previously recorded at 11. It's now 11,600. Kasi from 10 plus 1,600, it's now 11,600. And may difference pa tayo dito na 600. This is now your loss or your forex loss. Okay po. In the books of the seller, you will have a debit to accounts payable. Hindi siya affected. $200 and credit to cash, which is $200. Okay, so if you notice, there's no gain or loss here. Why? Because the transaction is denominated by the reporting currency. No gain or loss. Okay? Dito, take note that you are going to report gain and or loss. Pwedeng gain yan or loss. Okay? Dito nagkataon lang na gain and then loss. Gain for year 1, okay, and loss for year 2. So if you're going to add this you will now have a total of gain or loss. You will have a total gain from the transaction, no, amounting to 1,000 pesos. That's your net gain. So these are just some of the common questions, no? Like with the fluctuation in the inventory, how much will be the value of your fluctuation in the exchange rates? What will be the value of the inventory? Okay, take note the assets acquired will be measured based on its historical transaction. You are going to, or historical value pala, you're going to value this based on the transaction date. Okay, but this one, accounts payable and accounts receivable or assets or liabilities arising from these transactions, they should be valued using the closing, your closing rate. Okay, so ito dapat ay closing. Dito ko pala dapat sinulat. This one should not be adjusted because okay. Kasi yun. Okay po? Yan. Common question. How much is the gain or loss for year 1? For year 1, it's 1,600. What about for year 2? You have a loss of 600. How much is the gain or loss from this transaction? Okay, you have a net gain of 1,000. Okay. Ayan. From the date of transaction up to the settlement date is 1,000. You can actually compare this with our earlier examples. Okay, so you have a gain of 1,000 then. It's just that this one, okay, the measurement date, okay, the transaction date, and the settlement date, okay, is found on the same year. Kaya minsan ang na-report yung 1,000. But when there is the balance sheet date in between the two, meaning this transaction date is found in year 1 and the transaction date is found on year 2, this 1,000 now, okay, will be divided into 2. Some of that will be reported in year 1 and some of that will be reported in year 2. Like so. Okay. Same with this example. Okay. If the transaction date and the settlement date is found on the same year, ibig sabihin nito, the measurement date is in the same year, okay, there is just one-time reporting of forex gain or loss. In this case, you have a gain of 18.18. But if, ayan, may balance sheet date na in between, so this will be divided into, your 18.18 will be divided into 2 years or will be reported in 2 years. For year 1, you have 27.59, which is a gain. And for year 2, you will have a loss of 9.41. Pinag-add mo yan, you will have 18.18. Okay. So, I guess that's it. Thank you very much for listening.